Well, Bitcoin is the asset without that counterparty risk. You want to get away from counterparty risk to competitors, countries, corporations, creditors, currencies, or cultures. You got to find something that's not exposed to any of them. And that's Bitcoin. So if you could buy a $100 billion company growing 60% a year at 1 times revenue, and if it was more profitable than your own company, would you do it? Of course you would. What if you could do it every year? Forever, right? Bitcoin is the universal, perpetual, profitable merger partner. And I'll tell you, the conventional investment banker will tell you when you've lost hope in your business, you either do an LBO and you take yourself private, or you got to do a transformational acquisition. And they're pitching you on buying something at 5 times revenue or 10 times revenue that's not growing. I'm giving you something which is dirt cheap, 1 times revenue that's growing 30 to 60% a year, right? It doesn't get better than this. The great irony, it's the least risky corporate acquisition imaginable, and there's perception by the consensus that it's risky.
Why would you store your wealth in a place where politicians can seize it, war can destroy it, or inflation can drain it? That's the urgent question Michael Saylor poses as he makes the case for Bitcoin as the superior form of capital in the 21st century. Saylor argues that Bitcoin succeeds on a simple premise. Smart people everywhere just want to keep their money. Unlike physical assets, like buildings, currencies, or even gold, Bitcoin is a digital, incorruptible, borderless store of value. It's invisible, immortal, teleportable, and protected by the most powerful computer network on Earth. He emphasizes, Bitcoin is the longest-lived capital asset in the history of the world. You can use weak currencies to store wealth for 3 years, strong ones for 10, equities for 50, but only Bitcoin allows you to hold value for 500 years or more. It's not just money, it's economic immortality. Saylor calls out companies like Microsoft for squandering shareholder capital on bonds and stock buybacks. Over the last 5 years, he says Microsoft destroyed 97% of its capital, weakening its balance sheet and exposing investors to increased risk. Instead, he argues, corporations should follow MicroStrategy's lead and put Bitcoin on their balance sheets, converting decaying fiat into appreciating digital capital. He declares that Bitcoin is 21st century money, a digital alternative to 20th century bonds and 19th century gold. With the SEC's Bitcoin ETF approval and fair value accounting on the horizon, he sees 2024 as year zero in a financial revolution. Saylor's final point is clear. If you want to escape financial fragility, preserve capital, reduce volatility, and thrive in the digital age, embrace Bitcoin. Anything less is a slow decay into irrelevance. Before we jump back into Michael Saylor's powerful insights, take a moment to imagine this. Somewhere out there, someone you know is stuck, doubting Bitcoin, questioning the future of money, unsure where the world is headed financially. This video could be the wake-up call they've been waiting for. So do them a favor, hit that share button and send it their way. While you're at it, tap like if you're the kind of person who sees the bigger picture, who's not just watching markets but watching history unfold. Got a thought, a question, or even a wild prediction? Drop it in the comments. We read every single one, and this community thrives on sharp minds and bold takes. And if you're someone who lives for deep dives, market moves, and future-shaping strategies in Bitcoin and crypto, go ahead and subscribe. You don't want to miss what's coming next. Now, let's get back into the mind of the man who's betting it all on Bitcoin, and maybe, just maybe, you'll walk away seeing the world a little differently. Thank you for being here, and enjoy the video.
Every force on Earth is trying to drag the company's performance back to the mean. It's trying to actually drag you back, and the more successful you are, the bigger the target you are. That's why it makes so much sense to partner with a decentralized network that doesn't have a CEO. Well, what about the last 12 weeks? Well, we've gone through the tariff tantrum. Guess what doesn't get tariffed? Right? Bitcoin. No tariffs on Bitcoin. Right? Or another way to say it is all these companies are struggling because they do a lot of stuff. And to paraphrase the Tao of Steve, doing stuff is highly overrated. Okay? The more stuff you do, the more exposure you have to fire and flood and war and tariff and supply chain and regulatory action and politics, et cetera, et cetera, et cetera. So if you look at this report card, what's happened? Well, right now we have over the last 5 years, we have the number one return out of the S&P 500 universe. We've got the number one options market in the entire crypto complex. The number one return, over the Bitcoin standard era, the number one volatility, the number one options market is a function of market cap, the number one Bitcoin position, and you can see, our trading volumes are 6 billion a day. Now, why else is this going to work for your company? Because companies can do something that individuals and trusts can't do. Institutions can't do this. Families can't do this. Companies can issue securities. Companies can issue credit securities like convertible bonds, like junk bonds, like investment grade bonds, like preferred stock, like equity, like warrants. These securities are in high demand. What you can see from this chart is the one way to turbocharge a bond is back it with Bitcoin. So our convertible bonds have a blended performance of 62%. That outperforms Bitcoin. If you're buying Bitcoin, you're buying the most volatile asset, most volatile commodity in the world. And yet you can beat that volatile commodity with a credit instrument that gives you downside protection. And that's pretty amazing, because if you want to compare that to the S&P index or the NASDAQ, you can see it's 5, 6, 7x. But look at the other bonds in the world. High yield bonds that are issued by companies that don't have any money, that are struggling to scrape cash flows, they underperform by, in this case, 7% versus 62, by 85%. Look at other convertible bonds, right? It's not just issuing a convertible bond. It's like you want to issue a convertible bond with a crypto reactor in the middle. You want an energy source, a volatility source in it, and a performance source, right? And so simple converts are 4% performance instead of 62. And then investment grade bonds, 1%, you see. So we're able to do this because we're a public company. Your company can do this too. And then you look at this risk return matrix. The other thing an operating company can do is it can create equity, which is volatile, which gets traded. And then people will actually want to buy all the other credit instruments in order to get the upside with less downside. So what you can see here is all these convertible bonds and our preferred stock. It provides you with upside, but less downside than the common equity. So for the risk-averse investor, you're providing them an on-ramp to the crypto economy, right? You can give them 10% of the risk, 20, 30, 40, 50%. You can give them half the volatility. You can give them guaranteed yields. And there's a massive market for that. When you adopt the Bitcoin standard, you're able to create Bitcoin-backed securities, and there's $500 trillion of fiat-backed conventional securities in the market. I just showed you all the equity underperforms. I could show you other slides that would show you all the credit instruments, all the preferred stocks, all the investment grade bond, they underperform, right? The preferred stocks are bought by people and they're just shoved in a portfolio, going nowhere. You're just waiting to die, right? There's nothing that's going to happen there. And the equity is like, everybody knows there's a 90% chance my equity won't work out. They don't want to play the game. You have to change the game. The greatest digital transformation of the 21st century is the transformation of capital. You're supposed to be in the digital transformation business. This is the transformation of capital, right? Global wealth is spread across $900 trillion of assets. Bitcoin is $2 trillion. Most capital is divided between long-term capital, that's the store of value assets you just hold to keep your money, and then other assets held for utility. the stuff, the building you need to work in, the warehouse, the working farm, the stock you're holding for dividends. When you see the world that way, what you realize is that risk factors are destroying the long-term capital, right? Your capital is being destroyed by taxes, by inflation, by tariffs, by insurance, by torts, culture shocks, regulation, antitrust. Every single 10K has got 30 pages of these disclosures in them. And so that long-term capital, it's transforming into digital capital because there's no fires in cyberspace. There's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no war in cyberspace. Why don't you just move your money someplace where some politician is not going to take it away from you, or some war isn't going to deprive you of it, or lightning's not going to strike it? Because at the end of the day, Bitcoin succeeds based on a simple premise. A bunch of smart people in the world would like to keep their money. Period. That's the idea. Right? Who's buying it? The smart money. The smart money everywhere in the world is buying a digital network to keep their money. That's the idea. Digital capital is, it's better. A digital building is better than a physical building. Everything you hate about the building, that it's visible and the mayor can rent control it and weather can strike it, everything you hate about it goes away. And instead, the building becomes invisible, indestructible, immortal, and teleportable. Everything that makes it better, you add in. Everything you don't like, it goes away. Bitcoin is the immortal asset. It's the asset that lasts 1,000 years. You want to keep your money 10 years? You want to keep your money 3 years? You buy a crappy currency. You want to keep it 10 years? Buy a strong currency. You want to keep it 50 years? Buy some kind of company or equity and worry about it for 50 years, or buy some property. What if you want to keep your money 500 years? How do you do that? You can't do it with any conventional asset. You can do it with Bitcoin. Bitcoin is the longest lived capital asset in the history of the world. How many people want to be rich forever? Right? I mean, why wouldn't you want to be rich forever? Bitcoin represents economic immortality. It represents the quest to make my company live not a decade. The average life expectancy of a company, by the way, is like 10 to 15 years. If your kids died at age 12, right, you don't think that's a health problem? So what if I told you the reason your kids die at age 12 is they drink dirty water? And I said the solution is drink clean water and they'll live to age 90. Would you change? Right? The money is the money is the fluid. It is, you're running on toxic capital and you want to live forever. You need clean money. So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. Microsoft should be powered by digital capital. And Bitcoin is the highest performing uncorrelated asset. So you're going to hold something on your balance sheet that's not correlated to everything else. So let's look at the charts. Microsoft is up 18% a year for the past 5 years. Bitcoin's up 62%. What's the cost of capital? The cost of capital is the S&P 500. It's 14%. That's what you're judged against. How are bonds doing? They're down 5%. Now, what if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year. So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock.
And that's a wrap on today's video. But now it's your turn. What do you think about Michael Saylor's ultra-bullish stance on Bitcoin? And that bold advice he gave to Microsoft? Should they really adopt Bitcoin as a treasury asset? Drop your thoughts in the comments. I read every single one. If this video got you thinking, smash that like button, share it with someone who needs to hear this, and don't forget to subscribe for more eye-opening insights on Bitcoin and the future of crypto. Thanks for watching, and would see you in the next one.